Boom! At the open, all-time high for the S&P 500.
It's your boy Jimmy. Jimmy.
Now what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning I wanna turn on this. Becky quick. While the average man looking at this sad like she fine as it. I'm over here looking at tails and whips like yeah, 5'6". I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dropped, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot strategy and plans to make grand. Still in my wife beater, Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thumb, grow with the marijuana. Waking up with the fun, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and now I watch moves in the NASDAQ. Profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up watching them candles, profits. While I'm still in my sand, making profits. Yeah. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit him up with this resistance. Watch him roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up watching shit, I'm getting big profits. While I'm still in my same big profits. They used to watch me move them packets. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETF. Hey, my family. Hey, go, what we doing, my man? Hey, big profits. Hey, Shug, Mike, what we doing? Hey, big profits. Yo, Wolf, Professor, what we doing? Hey, big profits. That TTG money gang. Hey, we some snipers.
Hey, yo, what's up, everyone? What's going on, folks? Welcome to the True Trading Group live stream. My name's Michael Edward Paranati, and I go by Michael Edward. If you guys don't know, I began my trading career over 17 years ago working at T3 Alpha Fund. My first job right out of college. I had to go through an educational trading program before they let me trade $1 of their money. Then 2008 happened, and that was the Great Recession and the stock market crash, but also the same year that I received one of the firm's Trader of the Year awards. Now you fast forward, I'm the co-founder and head trader of True Trading Group, but along with my team of 9 other professional trading mods and over 30-person staff, we've helped thousands of people reach their goals. We actually have members in 115 different countries, so we truly are a global community here at True Trading Group. And for those of you that don't know, we're also the fastest growing and highest rated premium online educational platform that combines university and professional level trading and investing courses with premium stock market tools, live workshops, individual coaching and mentorship with, live workshops, individual mentorship for stocks, options, crypto, and futures. We also cover all styles of trading. So we do day trading, swing trading, also long-term investing. There's something for everybody here at TTG. See, but we take that university level curriculum, we combine it with today's top financial tools that are worth well over $5,000 a year on their own. These are tools that give you more information, help you make better decisions. They increase your chances of success. But unfortunately, most people don't use them. Why? Because they're expensive. You're talking $5,000, $6,000 a year if you were to go pay for these products on your own. It's a lot of money to ask for somebody to pay. That's why we spend years building relationships with these companies so we can put their tools and products on our platform at no additional cost to you. It's included. This is like Benzinga Pro's real-time news feed, congressional trading data, insider trading by management, a simulator that lets you trade stocks and options with fake money but real-time data. It's actually the same simulator that's used at Cal State University, Fullerton University, Wisconsin, Whitewater, Berkeley Haas, and Illinois Tech. You got TradingView's premium charting software with real-time tick-for-tick data by Quote Media, unusual options activity, options flow, dark pool data, short data, the trade idea scanners on our platform for you to use, and so much more. Yes, of course, you get our courses. Yes, of course, you get our trade alerts, but you also get all of these things when you join True Trading Group. We set you up with everything that you need to have the very best chance of being successful for one affordable price for the entire year. You also get access to our members, the most educated, helpful, supportive, and successful community of traders that you're ever going to find. Not to mention all the real-time trade alerts and the moderators and I that have been able to collectively maintain a cumulative win rate on all of our executions of just around 80% now, going on roughly the last 4 years. And of course, for those of you that are working, busy schedules, you have full-time jobs, all the tools, resources, alerts, everything's accessible on our mobile apps that are designed to keep you guys connected no matter how busy you are or what you are doing. So as long as you have a cell phone or a tablet, if you can listen to music during the day, then you can listen in on the analysis and get the real-time trade alerts and the push notifications when our moderators enter and exit their positions. So if you guys are ready to learn, train, and profit for real, you've come to the right place, because 6 nights a week, Sunday through Friday, we go live here with myself, other TTG Pro trading mods, and special guests who drop golden nuggets, give you free lessons, education, trade ideas, and commentary to help you become better traders. So if you have not yet done so, smash that like button, subscribe to the channel, turn on your notifications. Make sure you guys never miss out on any of these live streams because you asked for it. You all asked for it, and we're going to give it to you. Got a very special live stream in store for you guys here this evening. So hope you guys are ready for it. You asked for it. We're going to give it to you. I want to bring on right now, guys, and introduce to you my business partner and co-founder of True Trading Group. Everyone give a big shout out to Adam.
What's up, buddy?
What's going on, man?
Hey, how are you? Do me a favor. While I'm getting the rest of this ready, why don't you go ahead and welcome everyone that is going to be joining us in the Stockmaster app here in a minute.
They're not here yet, or?
No, they're here. So,
okay. Everyone that's joining us from the Stockmaster app, guys, welcome. Everyone that's joining from the Stockmaster app, you guys asked for it. We're going to give it to you.
I don't even know what that means. What does that mean, Mike?
We're answering all the tough questions here today because the most highly anticipated recession in history. Is it your stock market buying opportunity? If you did not do anything last year in the markets, if you didn't put any money to work, if you missed out on the great prices that we got in stocks last year, could this most highly anticipated recession, could it be your chance to get yourselves involved in this market? I'm going to give you guys exactly my thoughts on the big picture and also some of the stocks that I'm eyeballing that are on my shopping list. So everyone joining us from the Stockmaster app, welcome. You guys are in for one hell of a treat tonight.
All right. So for those that don't know, Mike has been teasing us for a little over a year, about a year, a little over a year. And basically what has been happening is this. Last year, right? Was it last year when you added to the long-term portfolio?
Yeah, I did it twice last year.
All right. Why don't you tell me a little bit about what that looked like?
Yeah, I'll pull up on the charts actually for you. I'll show you actually where I added my long-term portfolio in two different places last year. The first was here. That was a little bit of money, and then a much larger chunk went in right here. So this is where I was investing in the long-term portfolio last year. I did not get anything here. It's the same place where I got back there in June. My next buy, my final buy, was actually right here. And this was where I was going to be putting that last chunk of money to work. So I got money in here, and I was trying to get my last.
What did you buy? You didn't just buy the SPY. What did you buy?
Oh man, I bought Apple, Amazon, Alphabet, Microsoft, AMD, Nvidia, Snowflake, Palo Alto, Tesla. I mean, I bought.
All right. And how are you on these positions?
Up a lot.
Yeah, all of them, even Snowflake?
Yep.
Really?
Yeah.
Or SoFi. Was it SoFi that was not that great?
SoFi, well, that wasn't included in those buys. So SoFi was just a stock that I just bought and it ran, not when I was adding in my portfolio when the markets crashed. SoFi was just a stock that I bought. And then everything happened with COVID and the getting rid of the student loan payments.
Understood.
So yeah, I own SoFi from like $13 and change in my long-term portfolio. The stock's at like $7.50. I'm not selling it. I'm also not buying more. This is a situation of a stock that a company that really got unfairly hurt out of not anything.
Yeah, I mean, it happened though, right? I mean, it's not like, and it's not your fault. It was a good play at the time, but I mean,
I still think it is.
Yeah, but what I'm just saying, whether it's unfair or fair, it happened, you know?
Yeah, of course. I'm just explaining what happened to the company. So they generate 10 to 15% of their revenue comes from the refinancing of student loans. And that's also how they get a big portion of their new leads and their new customers onto their platform that they then give them other services to. But then you had for, 2 years, nobody had to, or for 3 years, nobody had to make a student loan payment. So that was, and it kept getting delayed and delayed and delayed. And it was supposed to get lifted like 4 or 5 times. And every time the deadline came up, the government just delayed it. And that really, 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 really hurt the company.
Okay. All right. Cool. So what we're doing today is about a year ago when Mike started to get into started to add to his long-term portfolio, it was a big deal because what did you do before that? You very famously sold everything, right?
Yeah. At the end of 2021, so it was like in October. It was actually, I'll just show you. So right here, I sold my long-term portfolio, and that was a big deal for me because it was the first time that I've really like liquidated positions. And I'm not talking about just like, trimming a position. Like I was actually, I was selling stuff because I was very confident that the markets were going to sell off in 2022. And I thought it was going to be a really good buying opportunity. And I've never really done that before. And I was very public about it. I told all the members of True Trading Group, I told everybody on YouTube that I was selling in my long-term portfolio. It's something that I really have never done before, where I just was blanket selling off a lot of my stuff. And it turned out.
What year was this?
the end of 2021. It was
right.
like,
So the end of 2021, and then in June of what was it? Was it June of 2022? You started to add back.
I started in May, and then I put a bigger chunk in June.
Understood. All right. So basically what's been happening is that Mike has historically done very, very well with his long-term portfolio. Okay. Very famously has done well. So for a little while now, he's been really kind of teasing that he is going to be adding to his portfolio, but then it just, for whatever the reason, doesn't happen, right? The conditions aren't right. He doesn't see anything he likes. The Giants, something with the Giants and baseball, like just insert sports reference. It just doesn't happen. But it's been this long-standing narrative, right? Joe, get on your typing. Here we go. Type the number 1 in chat if you have been waiting for Mike to do some form of an update on a long-term portfolio strategy. Go ahead, type the number 1 in chat if you've been waiting for Mike to do some sort of an update on his long-term portfolio strategy. 6 people, I guess we can go home. So as you can see, there's a lot of number 1s coming in chat right now. All of these people have been waiting, but it is the number 1 question. I'm sorry, I take it back. The number 1 question inside of True Trading Group is this being recorded? The number 2 question inside of True Trading Group is, did Mike add to his long-term portfolio yet? In that order, right? Is this being recorded? Did Mike add to his long-term portfolio? Those are the 2 biggest questions we get inside True Trading Group. And today, sorry, it's gonna adjust my camera a bit. And today, we're going to talk about the long-term portfolio. All right, that's what we're going to do. So you guys asked for it. We're giving it to you. Mike, why should, other than they have you and I telling them, can you give a little bit of actual reason why anyone should pay attention to you?
Well, I actually know what I'm talking about. That's
well. I mean, we saying
I'm not just someone that got lucky with crypto, bought a Lamborghini, and calls himself a guru.
Stop reading the script. I wrote that. I literally wrote those lines for you.
Right, and
I want to know if somebody's on here that is new.
Sure. Yeah.
Tell them, other than the fact that you have a very nice wooden mantle and there's a big stock chart on the screen, why they should listen to you. What is your background? So don't tell me what you're not. Tell me what you are.
So my background, guys, I didn't figure this stuff out on my own. My very first job out of college was working for a fund in New York City. And when I first got hired, I had to go through an educational training program before they let me touch $1 of their money. Before I was able to actually go live and actually be trading, millions of dollars of the fund's money. And then 2008 happened, and that was the Great Recession, the huge stock market crash. Market went down 50%. And it was, it was the worst financial crisis and the worst stock market crash that anyone alive today has ever experienced. The only thing that tops that is the Great Depression, late 20s and early 30s. And that is actually the same year, though, that I received one of the firm's Trader of the Year awards. So I've been doing this for a very long time. You're looking over 17 years now. I've seen a lot of different markets. I've been through bull markets, bear markets, sideways markets, volatile markets, non-volatile markets. And this is, I tell people all the time that I think that this is the best trading environment that I've ever seen in my life, as far as like day trading and swing trading. But even if you're not day trading and swing trading, the long-term portfolio opportunities that come about when markets do go down, a lot of people make very, very painful mistakes. And what I will tell you is making the wrong long-term investment decisions can have such a lasting impact on you, your family, and generations to come. And I don't mean that I'm not exaggerating in any sense of the word at all. I'm being completely literal and serious when I say that. There's so many people out there that panicked and sold in 2020 when the markets were crashing in 2020 because of COVID. And they all thought it was the zombie apocalypse and the world was going to end. I very famously, if you've been on this YouTube channel at all over the last several years, you can go back and watch them if you want, whatever. They're right on this channel. But in March, April, May, I was on this YouTube channel telling you guys this is the best buying opportunity that I've ever seen in my life. And for me, that was the best buying opportunity because I didn't have the money in 2008 that I have now. It was in my early 20s. I just started my professional career. So I had a lot more money now in 2020. And when the markets crashed, I was telling everybody in True Trading Group on the YouTube channel, I'm buying. I'm screaming from the rooftops. I'm buying everything I get my hands on. Adam, I told you that I'm buying everything that I can get my hands on. But you had a lot of other people that either did nothing or even worse, sold. And if you sold out during moments of panic like this, or if you sold out during moments of panic like this in 2022, you are doing such destruction to the wealth building that you will experience throughout the course of your lifetime for you and your family. It's not even just about you, but these decisions can be the difference of you retiring while you're still alive or not, or working until you're dead. These decisions can actually make.
Yeah, I was gonna say you definitely can only retire when you're alive.
Right. But that's the point that I'm trying to make. Like a lot of people work until they die. This can be the difference between, your kid going to the college or the university that they want to go to, or your daughter getting the wedding that she's always dreamed of, or going on that family vacation that you're never going to forget to the day you die. Like these type of decisions can have those impacts on you and your family and what it is that you leave your children after you've left this earth. I always say to people that, you want to define success and why you should listen to me, because you want to define success. Success, in my opinion, is your kids having a better life than you had. And I believe that with the knowledge that I have and the experience that I've attained over the years, I'm going to accomplish exactly that.
All right. Well, today is one of those days where if you're not a member of True Trading Group, you're going to get a little bit more than you bargained for. Before we begin this, and there's no sales pitch, before we begin this, I would really like to know who on here is not a member of True Trading Group, because you are about to get a lot more than you just bargained for. So if you're not a member of TTG, go ahead and type, what is it? Not a member, type the number 1. Is that what we're doing? Or type TTG? I don't know.
Which one is it?
I don't know. On the screen, it doesn't. Hang on a second. Is it a 1? Did we switch it? Yeah, type the number 1 if you're not a TTG member. If you're not a member of TTG, type the number 1 in chat. If you're not a member of True Trading Group, type the number 1 in chat. Let's see who we got with us. There we go. Web3 Arena NFTs Crypto. Welcome. Duff Beers.
Model Paul, Vaze, Tom, MD, Jacob, Skis.
Let's see who else we got. Great Dane SG. Go ahead, just type the number 1. You're about to get something pretty awesome.
Nice. Doug just joined yesterday.
Nice. All right. There we go. Web3 Arena NFT Crypto. I heard he is not a big fan of Bitcoin. Just kidding. All right, great. Let's take it off the screen. So now, let's get into it. We're talking long-term portfolio. We're talking about if you didn't start building your long-term portfolio last year, then what kind of lies ahead, right? So let's talk about it.
Yeah.
The very title of this YouTube video starts off with the most anticipated recession in history could be your stock market buying opportunity. Do you believe that?
Yes.
Okay. Do you actually believe that?
Yes.
We made the title up.
Listen, very selfishly, right? Hope there is a recession. Because every single recession, every single one in history, has been an amazing buying opportunity in the long-term portfolio. Every single one.
How are you going to buy if you have no money?
Why would you have no money?
Because it's a recession.
First of all,
how are you going to buy if you're in debt up to your ass?
First of all, if we do have a recession, I think it's going to be a mild recession. I don't think you're going to see like an 08, 09 unemployment spikes to 9, 10%. I think you'd be looking at a 4.5 to 5% unemployment rate, which is actually the 20-year average. 20-year average unemployment rate is around 5%. So I don't think that you're going to see a massive like recession like a lot of doomsdayers have been talking about. And I'm not just saying that now because the markets have rallied. I said this last year when the markets were crashing that I was like, hey, even if we have a recession, I think it's going to be a mild one. I don't think it's going to be something like you experienced in 2008. I mean, 2008 was a far different scenario than what you actually have.
Yeah, dude, that was soup kitchens and bread lines, and no,
that was the depression with soup kitchens and bread lines, but
whatever.
I don't see that type of a reaction. But what I would say to that comment is this is why we do this. Like every day I come on these live streams and I try to educate people to get them to understand that like, okay, right now unemployment is 3.8. Right now you have a job, your friends have a job. And if you don't have a job, you can easily find another one. Okay.
Is that true? I mean, there's over 1,000 people on this live stream. Is that true? I mean, it's a good sample size.
Yeah, it is a good sample size. I mean, listen, the unemployment rate, the labor data is what it is. Unemployment's 3.8 and jobless claims have come in under expectations. Now, I expect that data to soften over the last couple of months, but it has to. It's not you can't have the labor market stay as tight and as strong as it has been, but the data is what that is.
Yeah.
If you're worried about that, if you're worried about like losing a recession, I'm going to lose my job. Okay, well, if that happens,
I don't know if it's bad enough to where it's keeping people up at night, but it's got to be a thought in the back of some people's heads at this point.
Yeah, it's a very real possibility that we could have a recession next year. Yes. Are we in a recession right now? No. Is it possible you can lose your job next year? Yes. Is it possible you can get hit by a bus tomorrow? Yes. All these things are possible, which is why all you can do is plan. Which is why I tell people, it's like, don't wait until your back is up against the wall to give yourself another means of income. Learn how to do it when your back is not up against the wall. Learn how to do it when you have other income and you are paying your bills. Learn the skill then so that if you do get into that situation, you have another method of supplementing your income. It's a lot of people that joined True Trading Group during COVID were people that lost their jobs during COVID and came to True Trading Group and have learned to make ends meet through trading. And some of them never went back to work and became full-time traders.
Got a question for you.
Supplemented their income to get to that point.
Hold that thought. Got a question for you.
Sure.
Does COVID, in your opinion, still threaten the world market?
Not at all.
Are you speaking out of your beliefs or are you speaking objectively?
Well, I mean, you asked me if I think.
Yeah, no, I know what I asked.
Right. You asked me if I think that COVID is a threat.
Right. I'm asking you to objectively think. Meaning I know that whatever, we're not going to get into everyone's views, but I guess what I'm asking is, do you feel that in any real world situation that it could impact the markets again?
No. The only way that it would impact the markets again like we did in 2020. In 2020, the markets reacted that way because the markets knew nothing about COVID. And then we knew nothing. Now we know a lot about COVID. The only way that the markets react again in 2020, react to COVID like they did in 2020, is if there's some type of new variant that has a 30 to 40% death rate. And all of a sudden the virus mutates and it becomes, a very, very, very serious threat. It is not. And now that we know that, and you've got all these different treatments, all these vaccines, you have people that have built natural immunities to it. And yeah, sure, people are still getting COVID. The market could care less about how many people are getting COVID because the market knows there will not be any other type of economic shutdown anywhere in the world by rising COVID cases, unless those rising COVID cases are some kind of variant that's going to cause like mass death. It's the only way the market would care about it again. But
all right. Let's move on from that.
Yeah, that's. I don't think it's not on my board of things that the market might worry about in 2024.
Understood. Where are we at in the market right now? Today, where did we close at today?
426.
Okay, how much lower do you think we go between now and the end of the year? Everyone, write the number down. Go ahead.
I honestly don't think we go that much lower this year than we are right now. I think that you're looking at maybe 415. I'd say maybe 415.
Where are we at now? You said 420 something?
426. Because the way that I think that this year pans out.
Everybody start typing where you think the market ends at the end of 2023. Put it down. We're going to have Luciano go ahead. He's behind the scenes. We're going to have him write the numbers down. We're going to see who was the most correct. Go ahead. Type it in chat. Go ahead, Mike. He's frozen. There he is.
Yeah, I'm back. The way that I think that this year pans out is, and I'm going to give you for the next couple of months, this is the price action I think we see. I think the markets are getting a bit oversold right now. You probably have a short-term technical bounce that I think is coming in the next, couple of days or within the next couple of weeks. But then I think that bounce is shortable. And I think you get another leg to the downside, and that downside takes you right into like that 415 to 420 area, which is like also the 200-day moving average. And then I think the markets bounce from there. That's a huge level of support. And then you'll be going into the back, the part of the market where you actually have seasonal strength, because September, you have seasonal weakness. September is the weakest month of the entire year. If you look at the market's performance over the course of 100 years, September is the worst month. But then the market usually performs well going into the end of the year. Not every year, but for the more often than not, the markets do well going to the end of the year because the consumer spends a lot of money because of holiday shopping and everything else. The way that I think you're going to see this is that you're going to get maybe a little more downside into that 415 zone, markets bounce, and people kind of feel better that, oh, look, we got some good holiday sales. Maybe the consumer is really hanging in there. But then that's going to be like one last little big spending spree by the consumer. And then next year you have people that are more concerned about, okay, the Fed keeping rates higher for longer, and then seeing a pullback and a slowdown in the economy. And then you get another wave of fear.
Okay. So you think we see a little bit more downside between, now and the holiday season, but then are you saying that you feel that we could rally a bit going into the holiday season?
Yeah, I think we can. I think we can bounce a bit going to the end of the year, especially if the market holds that 415. I do think you can rally into the end of the year as you get hedge funds chase performance. The markets are up a lot this year, a lot more than anybody would have anticipated.
Why don't you show us how? Let's put it in perspective. How much are the markets up this year? Actually,
this much. So here's where we started the year.
A Tyrannosaurus neck.
Here's where we started the year, and here's where we are.
What is it? I can't see it on my end.
And we started the year at like 380. Now we're at 426 on the SPY. I'll show you the NASDAQ, which is up even more. Okay, so the NASDAQ started the year all the way down here at 263, and now we're at 255. So the NASDAQ is actually up. NASDAQ is up the most this year. It's up like, what, I don't know, 35%, 30 to 35, 38%, 40%, something like that this year. That's a lot, man. That's a big move. That's a big move for the NASDAQ. And you came into 2023 with a lot of hedge funds that were defensively positioned. Everyone has expected a recession. So you had hedge funds were in a lot more cash than they usually are. They had hedges on. They were short a bunch of different things, and they were wrong on that. So you have a lot of funds that have drastically underperformed the overall index, and that doesn't look good for them going into the end of the year to their investors. So they're going to chase that performance, and I think you could see a little bit of a buying spree into the end of the year if you get a decent report from consumer spending for the holidays.
Okay. All right. So when we have, so in chat today or within True Trading Group, we were talking about when would be the time for people to begin to look at putting into their long-term portfolio when, if they didn't do it last year. And you said within the next couple of weeks.
Yeah.
Let me ask you a question. Why wouldn't we wait till next year? If you think the market's going to go lower next year, why would I even mess around with what's going to happen in the next couple of weeks? Why wouldn't I just wait?
I'll tell you why you shouldn't wait. When it comes to long-term portfolio investing, I'm a big component of averaging yourself into your positions, because you're never going to be able to pick the bottom. Don't ever try to pick the bottom. Okay? Because you ask any professional that does this for a living, any hedge fund manager that's a billionaire or manages hundreds of millions, if not billions of dollars, right? Not one of them will ever tell you, try to pick the bottom of the market, because nobody actually knows where the bottom of the market is. And no one knows it's the bottom until it's months after the fact. Okay. So you can't go your entire life waiting for the bottom. You're never going to catch it, and you will always miss opportunities. The best times to buy in the market is when everybody thinks it's not a good time to buy in the market. That means it is a good time to buy in the market. Warren Buffett very famously says, you be greedy when other people are fearful. You be fearful when other people are greedy. You need to be thinking the opposite way.
Yeah, but what if Warren Buffett was just trying to sell you a subscription? You know what I mean?
Right, but he's not. I mean, he's the best investor that the world really has ever seen. And when you're sitting here and you're trying to determine, why don't I just wait for next year? Because I got to tell you something. If you asked me in January, what are the odds of a soft landing? I would have said, I don't know, 15%, 20%. But after you've gotten almost a year's worth of data, you've gotten 3 quarters worth of data, even if you think that you are dead set, we're having a recession, even if that's your thought, you can't ignore that the probability of a soft landing has gone up. It has. The jobs market has held up better. Earnings have held up better. Inflation is coming down. You cannot say that there's a higher chance of a recession. There's a higher chance of a soft landing now than there was a year ago, because there is a higher chance. Now, does it mean it's a 90% chance? No, but it's a higher chance. And if you wait for next year, and let's say you're wrong, and let's say there is no recession, and we have a soft landing, then you aren't going to get $1 into this market, because you're always going to be waiting for the pullback. So what I always suggest to people is that this is what I do with my own money. Okay. Now I put money into the market every single year without fail into my SEP IRA. I max out the contribution every year. I don't care if the market's up, down, left, right, sideways, irrelevant. The money goes in because I'd rather put the money into the market than pay taxes on it. So it's going to, I max out the SEP IRA contribution.
Wait. So if you have money invested in the market, you don't have to pay taxes on it?
If it's in a SEP IRA.
So if you have a SEP IRA
or an IRA,
you don't have to pay taxes on that money.
No.
You just skimmed right over that. I feel like that was a good point.
Oh yeah. There's limits on it though. You can't put like an infinite amount of money. I think Roth IRAs are like $6,000, something like that a year.
Whatever.
SEP IRAs are like 56 grand a year, or 25% of your income, whatever's less. So, that's money you can put into the market and not pay taxes on it. I mean, you'll have to pay taxes on it when you take it out when you're 65 years old, but by then it's already appreciated in value and you're at a lower tax bracket when you're retired than you are right now when you're earning an income. So you'd much rather pay the tax later, appreciate the money now, than pay the tax now and then appreciate a smaller amount of money. Compounding interest and compounding gains on, let's say, 50K versus 35K, you do the math, right? So that's why you want to max that out every single year. So that's regardless of the fact. But then whenever the market pulls, this is my rule of thumb. If the overall market pulls back 10 to 15%, I buy something. I don't care what's happening. I don't care what the reasoning is. I buy something. You want to know why? Because you get 10% pullbacks in the market almost every single year. And those 10% pullbacks are not followed by a massive bear market crash and recession. They're just really good corrections and buying opportunities. So I put a little bit of money in every time the markets pull back 10, 15%. But then the times when you get those 20 to 25% pullbacks and you actually get a bear market, which only happens once every several years, then I put a lot more money into the market because it only happens once every several years.
No, that can't be. So hold on a second. You mean a bull market only happens once every several years?
No.
All right, explain that. You lost me.
A bear market means that we have gone down by 20% or more. Okay. If the stock market goes down by 20% or more, that is the definition of a bear market. It does not happen often. Okay.
Okay. So what's happening right now isn't a regular occurrence. I guess I'm confused.
Right. No, it's not. It's an opportunity is what it is. Bear markets are opportunities because they don't happen all the time.
I mean, I think some would dare to say it doesn't feel very much like an opportunity.
It doesn't feel like an opportunity at the time. Look back 1, 2, 3, 4, 5 years from now, or from the bear market. It's the greatest. You find out it was the greatest opportunity for you to put money to work ever.
Show it on the chart.
Look at them. Okay, here. Okay, here's your bear market. Here's your bear market territory of 2022. That's when we got down more than 20%. Okay, look what the markets did then 1 year later. That's just one example. Let's go back to 2020. Bear market right there. There's when you entered bear market. We actually went down about 35%. Okay, during COVID. I'll zoom it in. Now, it feels terrible when the market's crashing, right? It feels terrible. But even if you were early, even if you were like, oh man, I suck at this, and you bought all the way up here, look at where the market is 1 year later, 2 years later, 3 years later. Look at where the market is. Then let's go back again. Let's go back to 2018, because 2018, you also had a little bit of a bear market going into the end of the year in December, and actually put some money to work here. Teaching members that were a member, in 2018 know that we were actually putting money to work here. Why? Because the market was down around 20%. And then look what happened the very next year. It looks like
one sec. Keep your train of thought. Everybody go ahead while he's explaining. Type in the chat how much you would have to invest in a long-term portfolio tomorrow. Type in the chat the dollar amount you would have to invest in a long-term portfolio tomorrow. Go ahead, Mike.
Yeah. So there's one example. Bear market, there it is. Buying opportunity. You can go. Let's keep going. Like we keep going. Bear markets. You had a little bit of a double dip kind of crash there in 2015 and 2016. Okay, there you go. And then look what the markets do in 1 to 2 years later. Then let's go back all the way to the next bear market before that, 2008 and 2009. We actually went down 50%. Look what the markets did for the years that followed that. Then let's go to the dot-com bubble. There's bear market down 20%. Look at now this one took the longest amount of time. Look where the markets are though years later. Every single time there's a bear market, it's a buying opportunity. Every single one. Every bear market that you've seen over the last 25 years. You don't get these, you don't see the market where you get these situations where there's a bear market and the market goes down 80% and then never goes back up again. It's not the end of the world.
Okay.
But you get people that want to take advantage of that fear. And you get a bunch of nonsense on social media, and you get
go ahead. Sorry.
No, you get a bunch of nonsense, and it scares the hell out of people, makes people think that the world is ending, and they don't act. And they don't act because they're scared for their lives, but they're scared because they don't know any better. You're scared because you don't know. You're scared of the unknown. But if you actually know what you're doing and you keep a level head during moments of fear like that, you actually start to realize that it becomes just an amazing buying opportunity for you and for your family to generate wealth over years to come.
All right, cool. So I want to do a little experiment. Okay. Joe is next door. Joe, what do you think the average amount of money that somebody has to invest with tomorrow would be? Send it to me in Telegram. I got a fun little thing we're gonna do. TTG members, you can thank me later for this. Let's see. 15K. Yeah. Yeah, I saw the same thing. I said, let's go $5,000. Let's go 5,000. All right. And a little idea here. Okay. All right. Perfect. I'm going to share my screen. You ready for this?
Yeah.
All right. I want you to meet Brian.
Hey, Brian.
That's Brian. All right.
Dapper young fella.
He is a dapper young fella. That's Brian. Brian is, I don't know. You want to do $1,000? Want to do $1,000?
Do 5.
Do 5? Okay.
Like a Roth contribution.
No. It's a little advanced. Look, Brian has. Let's decide on a number here. Okay. Everyone's named Adam in the behind the scenes chat. I have no idea who typed that.
Well, you know it's not you.
Right. So I guess right.
And you know it's not me.
Oh no, I thought it could be you. I don't know.
Well, look at my screen. My thing says Mike.
All right. Well. Oh yeah. No, that's true. All right. Here's what we're gonna do.
Did you see the updated names?
Not Adam. I can't argue with that. All right, Brian's got $1,500. Okay.
All right, Brian. Look at him, Mr. Moneybags. Look at him.
He's killing it right now. All right. The stock market's doing what the stock market's doing. Brian has never built a long-term portfolio.
Okay.
Brian really wants to build a long-term portfolio.
Okay.
Walk me through what Brian should do and when to start his long-term portfolio with the $1,500 that he has.
I would say.
Hang on, we're gonna map this out. Go ahead.
I would say that my thoughts. If I had $1,500.
No, Brian, fictitious
No,
Brian.
I'm saying if I had $1,500, what I would do with my money is, as the SPY approaches 415 to 420, which I think happens within the next couple of weeks, I would take 25% of that cash.
Hang on. So we're gonna do this. Hang on. As the SPY approaches what?
415 to 420. I would take about, maybe 25 to 30% of that cash. So I guess, what is that? $450.
Let's just leave it at 25%. What is 25%?
375.
375?
Yeah. And
All
like
right.
Shah Boom goes, he should get a Teach D membership and start learning.
All right. So how much is it? You
Yeah,
said
Doug
375.
Meyer too. Yeah, 25% is 375.
All right. So what are we doing with the 375?
I would start putting that money, and I would target, some of the premier stocks that we like.
I want the actual tickers. Go ahead.
If he's first starting, I would look at Microsoft.
Hang on. Okay.
I would look at AMD.
Hang on.
Nvidia is going to be too expensive of a stock for the amount of capital.
And then what are they doing? Are they just splitting it evenly between all of these?
Yeah.
Okay, so we're going to do 375 and we're going to split the 375 evenly.
So 125 in Microsoft, 125 in AMD, and I would do 125 in Snowflake.
And then 125 in Snowflake.
Mm-hmm. He's going to have to buy fractional shares, though.
Okay. What brokers support that?
A lot of them do now, actually. I don't know exactly which ones. A lot of brokers support.
What advantages and disadvantages are there to buying fractional shares?
It's just so he can afford it. So if you're only going to put $125 into a $250 stock, you can only afford half of a share.
Okay. Hang on. All right. Now, what is the plan here? Right? Are we gonna? What are we doing? How long are we holding this?
You're holding that for a long time. You're holding that for years.
Okay, like 30 years.
Oh God, no, not 30. I mean, sure, yeah, 30 years, but no, I mean, you're at least holding that for 5 to 7 years.
Okay.
But yeah, 30 years. I mean, yeah, the goal is to, building your long-term portfolio. The goal is to find just really good companies that continue to grow over time, like a Microsoft, right? You look at what Microsoft has done over the last 2 decades, right? Look at Microsoft over the last 25 years.
How much time did you say?
I don't know. You want to hold it for several years, at least 5 to 7 years.
Okay. All right. So that's the first part of it, I guess, right?
Step 1, right?
All right. Look at Brian, man. Brian just invested in Microsoft, AMD, and Snowflake. Right? Now what?
Now, Brian sees what happens next year. And
so now Brian waits.
Now Brian waits.
So this was step 1. Yeah.
Mm-hmm.
And then step 2 is wait. Yes?
Mm-hmm.
What are we waiting for?
We are waiting then to see how the economy holds up next year and if it looks like we're going to have a soft landing or a recession.
All right. So really, now, does this apply to all amounts of people's money? So for example, this is for $1,500. But what if you're working with $100,000?
Yeah, I would take 25 grand of it and I would start putting it to work. Listen, this is and this is what I was talking about today inside of True Trading Group to members. There's a lot of people out there that did not invest anything in 2022, that missed out on the market crash that happened last year. And if you missed out on that, you missed out on unbelievable prices in really, really, really good companies. Now, if the markets pull back a little bit here, you cannot risk, again, not getting anything into the markets. And then let's say we do have a soft landing, and let's say next year the SPY's at 520. Very possible. That could happen. We can have a soft landing. Inflation could go back to 2%. The economy never cracks. AI boosts earnings and growth in the tech sector, and the NASDAQ rallies to new all-time highs, and the SPY gets pulled up with it, and next year you're at 520. Don't say it's not possible. It's an ignorant thing to say it's not possible. You should never be so in love with your idea that you are oblivious to even acknowledging the other side of the situation. So even if you think there's going to be a recession, you still have to be open to the idea that maybe that could happen. So if you did nothing, now listen, I'm not in a rush to pour money in, but I got a lot of money into the market last year when the SPY was in the 380s and when the SPY was in the 360s. So yeah, I have capital that's still sitting on the sideline that I've done other things with. I bought short-term T-bills to get, that 5% yield over the course of a year, right? Like an annualized rate of return. So like you get a 5.5%, you can get these short-term T-bills and get 5.5% annualized on your money, right? That's free money. So like little things like that, I was in Jeppy, which was paying an 11% dividend last year.
Yeah, there's no reason to use slurs on here, bro.
Jeppy, JEPI, it's a covered call strategy ETF managed by JP Morgan. It was something I told members about in True Trading Group that last year was just an amazing position that was paying 11%.
Right. Let me know. I got important follow-up questions. You don't have a whole lot more time because you have your 9-week accelerator starting at 6 in the study hall room for members. Okay.
Correct. Yep.
All right. Don't mean to cut you off, but here we go.
Mm-hmm.
Just want to go over this. So you're taking 25%. And you're putting it in, and then we got 75% left on the sideline, correct?
Yes. And then what I would do is that next year, as you have a recession scare, I would be targeting like 370s to 380 for 50% of the capital that goes in. Now, with the 50% of the capital that goes in,
50% of the capital meaning another 25%.
What?
If I put 25% in,
right,
and I have 75% left, you're saying get up to 50%? That would be another 25%, right?
No. Like, so as a whole. So like if you had 100 grand, right, you put 25 in, now you'd be putting 50 in.
Okay, when do you do this?
The area that I'm targeting is a recession scare around 375, 380 on the SPY.
Okay.
And the final 25% comes in if we actually have a recession. And you
wait, recession scare 375 to 380. Deploy 50%. All right. Is it too much? I guess like we can come back to that as far as what stocks. Right.
I would add to the stocks that you already bought, but then I'd be looking, then I would say NVIDIA, I would say Alphabet, I would say Amazon, I would say Palo Alto.
Hang on.
One of the companies that I would have said just got acquired, that would have been Splunk. SPLK is another one that we bought last year.
What is the ticker for Palo Alto?
PANW.
All right. So NVIDIA, Amazon, Palo Alto. You said Alphabet?
Yep.
Okay. What else? Is that it?
Oh, yeah, Meta.
What about Apple, Tesla? Like, what about those?
Yeah, Meta, Tesla. I would do Meta. I would do Tesla.
And how are we determining how much to go in with this?
I mean, that depends on so many factors. I can't tell you how much money to put into each stock. Every person's got.
No, I'm not telling you. I mean, but you told us to split it evenly on the first one, so you can. But I guess my question is, you're throwing out a bunch of tickers now. Now this becomes a little bit more confusing. So, if fine, you don't want to tell us specifically. I would like to know what is it, so to speak? So, like, what is the formula here? So that I can make the decision for myself.
So like, so many facts, so many things are like, how old is this person? Right? Like,
all right. Well, Brian's pretty young, man. Assume
right.
Brian
So I'm assuming this is a young person, and that's why
Brian's 40.
And that's why we're leaning into all these tech stocks, because
we're leaning into tech stocks because that's what you told us. But Brian is 40.
Right. But this is why I'm telling you that we're leaning into tech stocks. Now, someone that is significantly older, I would be looking at a lot more lower beta names and dividend stocks.
Why?
And you're also talking about someone that doesn't have a long-term portfolio at all. So, like, this is to get yourself started, but you have to realize over the course of time, now that Brian decides I'm going to start doing this, then Brian should be diversifying these holdings over time, and then eventually going into some other names, like other names that I would look at that are not like tech related. I would say Starbucks. I like Starbucks. I mean, I know Uber. I like Uber. Uber's kind of tech related too, but not tech like you would think these other companies are. Like, I like Starbucks. I like Uber.
Quick question.
I think Kava. What?
Absolutely. Hang on a second. There's 7 stocks on the board, not including the first 3. Should we just take $750 here and, divide it up by 7, or take 750 and divide it by?
No, because he only has 1,500 to start with. All right, so if he only has 1,500 to start with, we got to narrow this down. That's too many stocks.
Okay, so that's important for somebody to know.
Yeah.
Right? Like, if you only have a limited amount of money, you have to go ahead. If you only have a limited amount of money, you have to be selective of what it is that you're doing.
Then I would say,
Dylan Carson says, Adam's trying to get every detail. You're killing me, Smalls. I am trying to get every detail because this stuff is important. Because if you're not a member, you are a member. These are the questions we get asked. You get to this part in a couple weeks or next year, right? Then these are going to be the questions, right? Well, I only have $1,500. So what do I do with seven stocks, and how do I take that and put it in, right? So anyways, go ahead.
Yeah, we gotta lower that. The 7 stocks would be too much for someone that only has a $1,500 portfolio.
What about just straight buying an ETF?
Yeah, sure. They can do that. They can just make it simple and just buy the Qs.
Not the SPY.
No, I would want him to be predominantly weighted on tech. If he's young and he's looking for growth, he has no holdings at all. And I would say to reach where the growth is, and the growth is in the NASDAQ.
Okay.
So to make it simple, Brian, you want to make it super simple? Great. When, you put 25% of the money, so $375 into the Qs, and as the Qs go lower, then you put the $750 into the Qs, and you got $375 left. And if you do have another recession, that money goes into the Qs, and now you've got a real diversified holding of technology stocks. And congratulations, you started your long-term portfolio. And now over time, we can start adding individual stocks to your portfolio. And then since you have all of your money in tech, you'd want to then go into other sectors and put some dividend paying stocks in there. You'd want to put healthcare stocks. I love healthcare stocks. Okay, I think you have some really good healthcare stocks. I like Stryker. I like United Health. United Health is my personal largest healthcare holding. I love that company. You've got ABBV. That's a fantastic dividend paying stock. That's another one of my large healthcare portfolio holdings. And then you'd want to look at, some other consumer staple names just for some nice little protection on some stuff. Like these are all the things that you want to do over time, but you have to make it, if you have a limited amount of capital, you got to start somewhere. And if you're young and you don't have anything, I think you've got to be in tech, because over the next 10 years, I believe that that's where the most amount of growth and the most amount of wealth building is going to come from as technology advances. And as technology advances, I only think that the speed of the advancements are going to continue to speed up. Like that's the whole premise behind innovation and technology. As technology gets better, it allows you to create better technology faster. That's the whole point of tech innovation. And now with AI and everything else, and then it opens up a whole new world of potential growth drivers for these tech companies. And I think that's where you need to be if you don't have anything. But listen, if you came to me and someone's like, Mike, hey, I've got a $500,000 portfolio. I'm getting ready to retire soon. What should I do?
You should contact a licensed financial professional.
Yeah, right. Exactly. Exactly. But if you were asking, hey, what would I do if I was getting ready to retire? It would be a completely different strategy.
I think Brian's future looks amazing.
Brian's future looks great. And hopefully Brian sticks to this. And if Brian puts $1,500 into the market every year, then by the time Brian's 65, he's going to be a happy camper.
Damn, Brian's got to wait till he's 65?
No, I'm just saying by the time he retires, he's going to be very happy that he did.
But, dog, Bugatti and all this is not fun then.
I don't know. I think Bugatti's a mansion and a yacht is always fun.
Yeah, but I mean, it's way more fun when you're Brian's age.
Fast forward to 65-year-old me on a yacht. Trust me, I'm going to have fun.
Guys, do me a favor, please. Smash the like button if you're watching this and you are entertained, right? You want us to do more content like this? You guys getting something out of this fun example today? Smash that like button, okay? We can go back to being an infomercial. We're really good at it. But we're trying to do something different. We're trying to increase the value here.
I love the dream board, or what is that? What is that?
Isn't that great?
Yeah.
Guys, go ahead and smash that like. There's 1,200 people on here, and we got 400 likes. All right. I got a real question for you though.
Sure.
They're all real. You know what I'm saying? But
thank you, George. I couldn't find the word. Vision board.
Yeah. What if Brian doesn't want to do any of those things? What if Brian can I not find any good ones here? Hang on. Oh my God. Oh, hey there, Brian. You know why I named it Brian?
No.
Because of my dog. Oh my God. Why can't I just get normal gifts? What is, oh, here we go. Fine. We'll run with this. What if Brian wants to trade options, man? Instead of taking Brian's hard-earned money and letting it sit for 6 or 7 or 800 years. Brian wants to learn how to trade options.
Okay.
Brian wants to trade options.
I like Brian already.
Brian doesn't want to have a long-term, but Brian only has $1,500.
Sure.
So Brian wants to trade options so that he can quickly turn the 1,500 potentially into some more money so that he could then have more money to build a long-term portfolio with. Do you believe that if Brian doesn't do the long-term portfolio build now, but instead starts to trade options, that is also a route that Brian can go?
Yes.
Do you want to elaborate?
So you can get a hell of a lot more leverage out of the 1,500 by just trading options instead of just putting in a long-term portfolio, and maybe making money trading the options so that you can have more capital to put towards your long-term portfolio, and also allows you more time to set money aside to build a stack of cash so that you can start building that long-term portfolio with. So you don't have to buy fractional shares, and you can buy more stocks and put more money into the markets. Someone that's first starting out, if you've got a brokerage account and you've got $1,500 in it, I would suggest that you start by trading options. But my advice for that person would be to start trading lower volatility options, and resist the urge of coming right into the market and buying Tesla and Nvidia options, because those are the most volatile options in the entire market. They're extremely expensive, and if a trade goes the wrong way, you can wipe out half of your account in the blink of an eye. So you've got to be trading options in lower volatility stocks, like things like Roblox.
Hang on. Trade Options by Adam Hyman. All right, here we go. All right, so I think now's a good time to talk about the benefits of trading zero DTE. I'm just kidding. All right, low volatility options with a $1,500 account. What options are we talking about? If you're just learning to trade options, what do we got?
BAC.
Did I spell that? Volatility. Yes. Okay. BAC.
RBLX. RUN.
You know I am. Go ahead.
CCL.
You know,
Yeah.
All right, go ahead.
PLTR. RIVN. I mean, that's enough. I mean, you get
All right. I mean, I'll tell you when enough is enough, but that's you.
No, that's
I know. All right. Question: Why those tickers? Why, if I'm learning how to trade options, should I look at those tickers as opposed to others?
Because they're a lot less expensive options. So the stocks are less volatile. So therefore, the implied volatility on the option is lower, and the option is lower. So you can have an option on these stocks might be 75 cents, $1, $1.10. An option on Tesla could be $8. An option on Nvidia could be $15. Right? So that means one option. If an option costs $15, that means one option is $1,500. So that's too much money, right? That's Brian's entire account.
Right.
And if that trade goes south, Brian just lost 40% of his entire account.
Right.
So trading these stocks or options on these stocks allows Brian to get more than one contract, so he can actually tier out of his position as he's right, instead of having to sell one contract all at once. And it keeps Brian in a position where he's not risking his entire account.
Brian also, not to throw a wrench in this, has a crippling cannabis problem. So that's also very expensive.
Okay. What does that have to do with him trading options?
He may want the option to not have to spend all that money. I don't know. You know Brian. I don't know Brian. Anyway, it's fine.
Lost me on that one.
It's fine. So why? What about? There's a lot of people that have a lot of fear or negative connotation about options because they're extremely risky, right? I know there's a lot of misconception there. What I'm saying is that could this be done with day trading and swing trading equities? Or would it take long? It would obviously, and I mean, I don't know if it's obvious or not. Would it take longer?
Yes.
How much longer?
I don't know. Longer, because Brian's going to be limited with his $1,500. He's going to be limited with how many shares he's going to be able to buy of a $200 stock, right? So,
but he could buy fractional shares.
Yeah, sure, he could, but the percentage moves on an equity are obviously far lower than the percentage moves on an option, which is the allure of options when you have a small account, that you can capitalize on 30, 40, 50, 100% moves with a small amount of money. You can't, to capitalize on a move in NVIDIA, it'll cost you $1,000 to buy 2 shares, right? So, you can buy, an option instead.
What do you think, or why do you think? Well, here, let's try this real quick. How many people in here have no idea how to trade options? Type the number 2 if you have no idea how to trade options. If you do not know how to trade options, type the number 2. If you do not know how to trade options, type the number 2 in chat. There we go. Okay. Tamika says, do you think, no. Oh, damn it, Brett. Tamika says, do you think this is going to matter with the one world currency taking effect? I don't know, man. I got my bunker ready. I'm good.
Yeah.
All right. So there's a fair amount of people on here that don't know how to trade options. I think there's a misconception with options that it's very complicated. I think people don't understand a whole lot of how they work. I'm not asking you to explain it all. I'm just saying that I think that, and I could be wrong, right? Sound out. If you agree, type agree or, whatever in the chat. But I think there's a lot of people here that don't, that are maybe intimidated by the idea of options, right? There's a lot of risk with them. They don't really understand how to utilize it properly. I think that's what it is. Stocks, for whatever the reason, appear to be easier, safer, and less risky, which I don't know. I don't necessarily agree with that 100%. I mean, do you, or?
I mean, it's safer in the sense that equities are safer in the sense that you're not going to see, and you're not going to have a stock go down 100% when you're in a trade, right? Because the only way for a stock to go down 100% is if it goes to 0.
Or if you follow certain gurus on YouTube.
Yeah, that too. But an option, you can very easily lose 100% if the option expires worthless. And there is an allure with options because the percentage moves are so big, but with the potential gain of triple digits also comes the risk of that. It's all relative to the amount of money that you're going to put into it. Like you can put a lot of money into a stock and lose 10%, and you can lose a lot more money than if you put a little bit of money and lost 50% on an option. It's all relative to the position size that you're putting into the trade. And you need to adjust that position size based on that risk. Some people feel comfortable with equities because you're actually owning something. You actually own shares of the company itself. An option is nothing. An option is a contract.
But look how much good that did everyone in AMC.
Yeah.
Like, who cares if you own? I mean, you know what I'm saying? It's not the same. Like, you know, I mean, I guess people.
You're talking about AMC.
I guess there's like maybe a status thing. Like, oh, I'm a shareholder of. Alphabet, homie, you have fractional shares on E-Trade. You know what I mean? Like,
of course, you have situations where a stock goes down 98%. AMC, CEI, all these pieces of crap. But you got to look at what these companies actually are. I'm talking about. I'm not one of these like social media people that talks about some 20-cent piece of crap that's going to squeeze to the moon, and you should pile into it and watch the stock go sub penny. 6 months later. I'm talking about trading actually real companies in the world, and you're not going to get into AMD and the stock's going to go to $1. You're not going to get into Roblox and the stock's going to go to $1. So if you want to play around in the garbage, then yeah, you're going to get filthy.
Got it. All right. So yeah, I mean, I think that. I mean, what would you do if you had $1,500? Would you start the long-term portfolio, or would you? Or
I would trade options.
Why?
I mean, you're asking. I'm a trader. You're asking me. I would do that rather than starting with the 1,500. I would maybe set more money aside so I can maybe start my portfolio with a little bit more money.
But what if you miss it?
Yeah, that's possible too. There's going to be an opportunity risk with every single decision that you make. So sure, is it possible that you miss it? Yeah. But if I turn the 1,500 into 3,000, I'd gladly miss it. Because I'm not going to turn 1,500 to 3,000 by just putting into long-term portfolio in a couple of months. All those stocks are not going to go up 100% in a couple of months. It's going to take time for them to go up 100%. But we have members in True Trading Group that have turned a $500 account into a $15,000 account within months, or a year, or 2 years. So then you're not going to turn 1,500.
Why would anybody want to do a long-term trading account if they can just keep doing the other thing? What's the point?
You should be, once you become a successful trader, you should be moving capital into a long-term portfolio. There's tax benefits for doing that. I mean, and obviously there's just the long-term growth that you're going to experience. You can't just sit. What are you going to do? What are you going to do? You're just going to keep growing your trading account up until your trading account is millions and millions of dollars.
Yeah, why not? Isn't that
you're not using it? You're not using the money. You're not putting $2 million into NVIDIA call options.
Mm-hmm.
So the money just sits there and does absolutely nothing and generates no rate of return for you. It actually loses you money because of inflation. That's a very foolish thing to do. Trading is to generate income. You generate income on trading. You build wealth by investing in the long term.
There you go. Yeah, I guess. So really, it's the tax benefit, I guess.
There's tax benefits, but there's also getting a rate of return on your money. If you're someone that, let's say you trade options. Let's say you're a successful trader and you trade options. You don't need a $3 million account to trade options. You are never going to use that buying power ever. So the money is just sitting in your brokerage account doing nothing. You should only have the money in your trading account. You should only have enough money in there for the buying power that you are actually using. Otherwise, it is money that is sitting there earning you zero rate of return for no reason, when you can put that money to work elsewhere and get a rate of return on that capital. If you got to think about it, you can have $100,000 in your trading account, but if all you do is put $1,000 or $5,000 or $10,000 into options, what are you doing with the other 90 grand? You're never using it. It's just sitting there doing nothing. So that money should be invested and then trade with the 10K. You don't want to just have that money sit in your account unless you're using it. You should be using the money that is in your trading account. If you're not, then the money that's not being used should be in a longer term investment account. How many people are on here that are still not members of True Trading Group? Just do me a favor and type the number 1 if you guys are not members of True Trading Group. Just type the number 1 as Brian marches by. Brian's on his way to the bank. Type number 1 if you guys are on here and you're still not a member. Brett, Tobias, Jay Bridges, La Pantera, Conquistador.
Somebody's name is Somebody's username is Conquistador?
Yes.
Wow.
I like La Pantera Negra.
What did you just say, dude?
The Black Panther. That's their username. And their icon is a picture of a Black Panther.
That's specifically to throw you off.
It's to throw me off?
Yeah.
Throw me off from what?
From what it really means.
Okay.
All right. I wish we had a cooler landing page for what I'm about to show you all. You know?
Mm-hmm. I have 10 minutes.
I don't care.
I care, and so do hundreds of other people.
You don't even know hundreds of people. All right. Here's what we're going to do. For everyone that is not a member of True Trading Group, what I'd like you to do is go to ttg3.com. That is ttgthree.com. We got to do something funnier and cooler. We'll do something with this landing page. It's fine. But now you know the real us. Okay? Don't judge it by him hugging himself like that. It's weird. All right. Go to ttgthree.com. Sign up for our 7-day trial. It is a full 7 trading days. Weekends, holidays, they do not count. It's a one-time payment of $3. Why do we charge the $3? Because there's a lot of crazy people on the internet. There's a lot of people that like to spam and troll and, come in and pump stocks and do all sorts of crap. I don't want those people in there. And those people are typically like super afraid to spend $3. Normal people are not afraid to spend a one-time $3 fee. So that's why we do that. It's a one-time $3 payment. When your membership expires, when your trial membership expires, you are never charged again, ever. It just expires and you are done. You have to manually sign up for a full annual membership. You have to manually do that. Okay? It will not renew with an annual membership. Come join us. You get the mobile app. You're going to get the stock alerts. You're going to get access to 3 sample courses. You're going to get access to Benzinga Pro. I mean, look, even if you don't sign up, you're paying $3 to get the full versions of Benzinga Pro's real-time newsfeed and Squawk, insider trading, government buying, TradingView Premium, real-time data for the 7 days, you're getting a tremendous amount for $3 to come hang out with us for a bit, right? All of which is accessible on the mobile app that is yours for free with the trial. All right, so you'll put in your information. It'll take you to this page. Look, it says one-time payment only. That's because you only get charged the $3 the one time. All right, scroll down. You'll enter your name where it says your name. And then where it says last name, you put in your last name. And then you'll put in your phone number. If it's not already checked, you'll check agree to receive text messages. And then you'll select how you found us. And then you'll select your payment method. PayPal or credit card. It is a $3 fee. 7 full trading days. You sign up today. The weekends and holidays do not count. So you're not losing any time by not signing up on a Monday. Okay? Go to ttgthree.com. ttgthree.com. All right? We offer a double your money back guarantee on the trial. If you do the $3 trial and you absolutely hate it and see no value, I will gladly give you back $6, although I will publicly make fun of you first. But I will give you back the $6. How much you guys pulling in from the $3 a month? Boatloads of like nickels. So many nickels.
So many nickels. There's even some quarters in there.
No, there isn't.
No, no quarters?
No.
Any dimes?
Nickels, bro.
Just nickels.
It's a fistful of nickels. Dirty, dirty nickels. Sign up for the trial. If you like what we did here, it's $3. You don't owe us anything after that. Come check us out. Come hang out with us. That's it. That's really all I got. You have anything you want to say?
Sign up for the trial, guys.
Nobody's signing up for the trial, man. You failed. You failed again. Bro, every time we got one. Damn it. I really thought it was going to be a, what do you call it in baseball? No-hitter.
No hitter is a good thing in baseball, but
We got to welcome Rahul.
big fat goose egg. All right.
Um,
You guys go join the trial.
no, really, we got to welcome Rahul.
Raul, welcome to the trial. The lone survivor. Guys, go to ttgthree.com. That's ttg3.com. Join me for the 7-day trial. It's 7 trading days. You can be with myself, the other mods, the members, trade with us, ask questions. If you want to talk about some long-term stuff, we can do that as well. Sign into chat. Use the mobile app.
You're talking too fast and nobody's understanding you, but we got to welcome Evelyn.
Hey, Evelyn. We're 2. Now we got 2. All right. One was on first and second.
That's right.
It's 2nd and 8. We gained 2 yards.
And don't forget, we get a double your money back guarantee on that $3. So at the end of 7 days, if you're like, yo, this is terrible, I am going to publicly make fun of you, but I'm going to give you back $6.
And then you can start investing like Brian.
Absolutely. Be like Brian.
Be like Brian.
Learn, trade, profit. Like Brian.
Brian. Be like Brian.
Be like Brian?
Yeah, not be like Mike. Be like Brian.
Okay.
Be like Brian.
We should do something like that. I think that'd be a good, like,
Okay.
I think we should do something like sign up for the trial, and if you don't sign up for a full year, we'll give you back $6 at the end of the 7 days. I mean, not now. We can work that in somewhere.
Yeah. Because I have to go.
You always have to go, just like my dad. My dad always had to go.
I'll come back though.
There's still 1,400 people here. Do we not mean anything to you?
All right, guys, join the trial again. That's ttgthree.com. Adam, you can stay on here, man, if you want. I have to go though.
No, I don't want to stay on here. Wacklaw Ziamek, love your name, bro. Huge fan. Says, I am loose. All right, we gotta go because I was gonna make some sort of a.
I know you are. So ttgthree.com. Join the trial. It's a one-time payment of $3. No automatic renewal, no automatic upgrade, none of that stuff. Just one-time payment, $3. I'll see you all tomorrow. Make sure you subscribe, smash the like button, turn on your notifications. Don't miss these lives. My accelerator crew. I'll see you in